Good morning, Trinidad and Tobago, and Happy New Year to all. This is my first time on set since the beginning of the year. So I wish you and your families and your staff all the best for this new year. Health, more wealth, and happiness to all of us as individuals. Today, I want to look back at what would have happened in 2016 with the local stock market and what can we expect, what would be the drivers for 2017. And in the 5 or 6 graphs that I have, I hope that I can show what has been happening, and then we can have a discussion going forward, probably into next week. What is the outlook and where should investors weigh their investments in the context of the local stock market? So let's get going and look first of all today at what has happened across the various markets. Okay, we seem to have, right. So when you look at what's happening, you look at this first graph. What does it tell you? It tells you essentially, if you look at the green line, that the market has been buttressed to a great extent by what has happened in terms of cross-listed stock. That is, those stock that are not domiciled in the jurisdiction of Trinidad and Tobago, but trade here. And there would be stocks such as Sagicor, now domiciled in Bermuda, First Caribbean, domiciled in Barbados, the Jamaican stock, NCBJ, Scotia Investments, as well as several others, Grace Kennedy and so on. And what this line is saying to you is, look, the cross-listed stock, as we just mentioned, those not domiciled in Trinidad and Tobago, collectively increased in value and appreciation by some 57%. Compare that with what has happened in the local market. In the local market, depreciation in value in 2016 by some 5.8%, compared to what happened in 2015, which was also down 1.6%. So on average, if you invested both on the locally domiciled as well as the externally domiciled stock, your average return on a weighted basis would have been about 4.06%. Not a very good story to tell, but that's the story nevertheless. Let's look forward now and see what's happening otherwise. Value versus volume trades. Well, there has been a significant decline in the value of trades if you look at this next graph. The value of trades have actually come down precipitously from about 1.5 billion to 1.16 billion. And if you go back to that graph, what you will also see is that while volume is increasing, from 93 million shares to 102 million shares, what has happened is the composition of that volume is changing to lower priced stock. That is, you are moving from stock that are, in terms of per share price, are much higher to stock that have fallen. For example, NCBJ and SIJL and so on are stock that would be trading at $1, $5 and so on in TT dollar terms, whereas you've had a deterioration in those higher volume stock trading at $50 and $60 and so on. So the more important story is the story of value of trades falling off in the market. Let's look at what's happening next. When we look at what has happened next, which is the third graph, what we would see is the performance. I'm going to talk more now about the cross-listed stock. And what we are seeing is in those cross-listed stock that I have mentioned to you, who are the better performers? Here's what's happening. Better performers, Sagicor, SFC, up 25%. Scotia Investments, domiciled in Jamaica, trading here, up 34%. NCBJ, up 42%. From the beginning to the end of the year 2016 in TT dollar terms. JMMB up 63%. FCI, which is First Caribbean, domiciled in Barbados, up 69%. And the biggest winner is Grace Kennedy Limited, domiciled in Jamaica, trading here, up 97%. So as we said, this aspect, the cross-listed aspect, has given a significant boost to the market by some 57% overall and on average based on market capitalization. However, our local stock have underperformed. Let's look for what are the lessons as far as that is concerned. So let's go to our next graph just to show what's happening to the TNT Index locally listed and domiciled stock. Not much to speak about in terms of the big winners or even big losers. Big winners, the highest uptick in the locally domiciled stock, TCL, up 10.3%. But this has been driven by the takeover bid that is in place and due to close on the 10th of January, the first closing I would want to say. And others have really not done very well in terms of the kind of increases that were experienced by the cross-listed stock. So you have PHL, you have Angostura, you have Anson Merchant, and you have Agostini. Very small increases relative to what has happened in the cross-listed stock. On the downside, there have been 12 advances, 13 declines, and 4 have remained flat in the year. But on the downside, what you could see is, let us say, the biggest decline, NEL, next big, 34%. Not unexpected for the energy sector. But then you go to Massey, down 15%. All of these stocks would have been impacted in the local market by what has been happening in terms of deterioration, in terms of the buying power of consumers as a result of a decline in terms of GDP. So where do we go next? Let's look and see what our next graph brings up for us. Well, you have some key drivers in the market, and what are the implications of those 3 key drivers? For listed stock, locally domiciled, higher corporate taxation. You will remember the Honorable Minister of Finance speaking about the millionaire's tax, and virtually all the stock on the listed market that are subject to tax locally, all of those stock would have been affected by the increase in taxation above $1 million from up to 30% from 25%. Lower consumer confidence. Of course, that is impacted by what's happening in the economy, the decline in GDP, some loss of jobs. So you have lower consumer confidence. That will translate into a decrease in buying, lower revenues for these companies. So you would have the revenue impact. And then, of course, the conundrum that is the conundrum of foreign exchange access. This is the currency impact, where firms that are in business are being squeezed in terms of their access to currency to be able to buy their goods, to put it into the hands of buyers. So this is the third impact, the taxation impact, the revenue impact, and of course that third impact. Then we go now to the question, is there any good news? Well, when we look at the next graph, we see that what has happened is that natural gas production has been falling. And natural gas production is likely to improve in 2017 into 2018 because of increased output on the gas side, not necessarily on the oil side. Let's speak to the drivers in 2017 internationally. U.S. international policies could impact what is happening. And other areas in terms of the interest rates for decisions as to investing outside. The Fed rate is going up, likely to go up. Another 2 increases, some say 3 increases in 2017. It's going to impact the value of your holdings. And all of these factors may have very significant impact upon global growth. Look for us on the newspapers, as well as look to our website at bourseinvestment.com for much more information as to this presentation. And you can see this presentation also on our website in terms of accessing at bourseinvestment.com if you want to spend more time on it. Look for our mutual funds, again in newspapers and on our website, bourseinvestment.com. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.